This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming out of a midweek holiday. Some were saying that the break is not long enough, but be that as it may, we are back this Wednesday morning to track markets once again. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. I think the best thing about today is that it feels like a Monday, but it's not. It's actually a Wednesday. So it kind of makes it a little easier, right? That you're already at the halfway mark. And plus, we're going to start off with absolutely phenomenal cues for the bulls. I think Prashant's color really says it all.
Oh. Well, markets aside, guys, good morning. It's a good day, right? For all those, brother-sisterly love as well. Today it's Bhai Dooj as well. So, wishing my sister, wishing all the sisters and brothers across India as well. Very, very special day. Blessings on that brother-sister bond. Besides that, it's a bigger day. India's taking on New Zealand. That's going to be...
You're in Mumbai, so it's...
You're in Mumbai. Second half of trade, I don't know who's trading and who's not. But that's going to be... And obviously, I'll put it third on the list that the equity markets are quite buoyant today. But that's the primary focus.
No, I think absolutely. So, whatever you need to do before 2 o'clock, I think, right? Before the match starts. But I think it's going to be a good session, and why not? Let's just kind of kick off with what you need to know as we begin the new session. You basically have, a situation where... it's almost a massive rally last night. And this is not so much about the S&P, it's not about the Nasdaq, but across asset classes. So we saw massive moves across equities, rates, the dollar index, not so much oil, but the first three we did. So the changes will come up on your screen. The Nasdaq ending about 2% higher, the S&P ending about almost 2% higher, and the Russell 2000 ending 5.5% up. The point about Russell is important because that is it's been down for the year, even as other indices. The other two indices have been up and up decently for the year. The small cap index in the US, which is more representative of the overall economy in the US, has been struggling, has been hurting. That went up 5.5%. That's the typical value trade which kind of played out, right? Now, what was the trigger behind all of this? You had inflation numbers which came out last evening. Core CPI is coming at about 0.2% month on month. This was a big miss to consensus expectations. The consensus was around 0.3, 0.4% or so. That CPI miss, the inflation miss, really unraveling any remaining expectations that the Fed will hike one more time this cycle. We've been making this point since that last FOMC 2 weeks ago that, how the consensus has moved very sharply, and for the first time, some of the last holdouts in terms of mainstream economists, etc., have all come around to the fact that this is it. The Fed is done, and we won't see any more rate increases. I think that feeling is getting reinforced. I just want to put out a table which tells you the sort of intensity of the moves, especially on the rate side. Look at yields, bond yields, 5-year down 23, 10-year down 19, 30-year down 13 basis points. So these are very, very large moves, and there is more coming. I don't want to get into the technicals of it in great detail, but it looks like, especially on the 10-year, since that's what we talk about the most, the next levels, which perhaps will come through, are the 4.34 to 4.36 levels. This is nothing but the 2022 highs and the August 2023 highs as well. So there seems to be sort of another 10 basis points, at least, if not more, here on the 10-year. Now, also, by the way, on the rates, we are on the cusp of posting what is a bearish outside week, which again kind of reinforces the point I'm making. The dollar index sold off aggressively. We had about a 1.5% cut. We are back at about 104 levels, not the 106.5, 107 levels we saw a few days ago. Now, on Monday, the Muhurat session, we were wondering and we were saying whether we have a line of sight to the all-time high. And I think we do, right? Very clearly now, it's 3.5%, 4% away, not even that now. So the Nifty on Monday, just to kind of pick up where we left off in terms of levels, managed to stay above the 40-day exponential moving average on a closing basis. That's great, 19,443. I'm not even talking about what happened on Monday because, Yesterday's session is all that matters. Monday was anyway actually absolutely flat in terms of US markets. Support for the Nifty comes in at the 20-day, which is slightly lower, which is at about 19,330. So there is actually both the 40-day exponential and the 20-day, which should act as supports. Resistance for the Nifty on the upside comes in at 19,500 and the 19,700. I'm rounding off both numbers. The exact numbers are on your screen, which is the 50% and the 61.8% retracement of the falls from the all-time high to the low that we saw. For the Bank Nifty, similarly, we closed above the 40-day exponential moving average, which is 43,875. And here, the next resistance levels come in at 44,200 and 44,700, which is again the 50 and the 61.8% Fibonacci retracement levels. But I think, I think there is enough in the tank for the market perhaps to push even higher, not today, but over over the next many weeks. The small cap index, that continues to be the strongest part of our market. Even on Monday, when the rest of the market did not do very well, the Nifty was down, etc., the small cap index ended at a new all-time closing high. The Gift Nifty will come up on your screen. I mean, the only peeve is that we start with a massive gap up, right? That's the only thing. So I never like chasing a move higher. So you want to look for dips and, that perhaps will appear, not large dips or anything of that sort. I don't think that's the case. But even small dips, I think that's the better way to get an entry, not 200 points higher and then hoping to sell even higher. If you're trading, at least, if you're investing, I'm assuming you're already in and you'll see the portfolio glow as markets open this morning. So that's what we have this morning. Surbhi.
Well, here's hoping that glow lasts, right? Well, it has everything going for it, I guess, with the kind of cues that you just spoke about. I just want to go back to the DXY and the 10-year right now. I mean, even now, the 10-year is falling even further. 4.5% was that first reaction overnight. Now it's 4.4%. Because of that US CPI number, 3.2% for October versus 3.7% in September. That's, of course, the year-on-year comparison on the US CPI print coming in lower than expectations and also big fall. I mean, just year-on-year, if you're looking at what September was versus what October was. The dollar index, of course, Prashant has mentioned. Let's just pull that up. Again, it's around the 104 pivot. So it's retaining a lot of that cut. It fell 1.5% immediately after the data, and it's retaining that kind of loss. It's still around that handle, and the US 10-year is looking even better from the bulls' perspective. Asian markets are a deep sea of green today. The rally is across 1.5% to 2%, depending on which one you're picking up. The Hang Seng is up over 2%, 2.3, 2.4. Japan is up almost 1.8. South Korea is up about 2%. So it's a big, big move across Asian markets. Therefore, we're expected to start along with this tidal green wave that we're getting this morning. The other thing is that there's inflation bonanza even here at home. So the CPI print for India was looking very, very good. The October print came in at 4.8%, a dip versus the 5% that we saw last time around in September. The good news is that core CPI continues to cool off as well. So core CPI is at 4.2%, which is lower than estimates. It's also lower than the October number. We were at 4.5% in October. And we are at 4.2% right now. The only niggling issue is food inflation, and we'll hear more from experts as the day wears on, because food inflation, vegetable inflation, pulses inflation, those are still sticky areas. So this number didn't fall. It was expected to cool off a bit, but it didn't. So let's see how that goes. The flows picture is looking all right. FIIs were sellers, but DIIs, as usual, they were offsetting a lot of that negative outflow. So 1,200 crores gone from the market, but 830 crores coming in. This is, of course, as per Monday's stats. But there's good news even here. I looked at the FPI selling intensity over the last few months, and that's reducing. So far, so good. November, it's a trickle. We are down just less than 500 crores compared to a selling of almost 25,000 crores in October, about 15,000 crores in September. Of course, and June and July were the big deluge inflow months of 45,000 crores and so on and so forth. But the short point is that FPI selling has reduced in the first half of November. So let's see how that plays out. Again, as Prashant mentioned, even for me, I'm watching to see if today is indeed that breakout day. The Nifty has spent 6 trading sessions consolidating in just a very narrow 500-point range of 19,000 to 19,500. 6 days of consolidation, and then you get these bazooka positive cues coming in. So can we get a breakout? We probably will in the morning. But Nigel, the question is, can this sustain? And can we really build on from here?
Well, Surbhi, in terms of the wish list that I would have from a bullish perspective is, when we come back tomorrow, we should be higher than the start today. So you close higher than the start. Gap up is good. Yeah. And the second one on my wish list is, when we come back tomorrow, we are talking about the big final. So both those two factors is what I'm looking at for the day. Let's run you through trade setup. First up, cooling in US yields, very, very good news for the equity markets, and maybe better news for the Nifty IT index. So the tech-related stocks, they should do well today. The Nifty Bank, that plays out weekly expiry, so that's going to be the other focal point in there. So both the pillars of the market will be in focus. And the Nifty and the Nifty Bank, well, they'll be running into resistance at the 50 and the 100 DMA. They've already conquered the 20 and the 200 DMA. So both of them will be looking at that mark. And the strength in the broader markets, I expect that to continue. How the FI is positioned? Well, they unbound some short positions on Monday's trading session. And now the short positioning is at around 81%. On the options side, the Nifty options data should come up for you. The 19,500 call, well, the total open interest is a crore short. It was being written quite aggressively. The total open interest build-up was close to around 25 lakh shares on Monday itself, and the premium was roughly around 41 rupees. Putting all that together, well, the resistance zone is at around 19,550 to 19,600. And I say that the 50 and the 100 DMA as well is in that vicinity. In fact, the 50 DMA is at around 19,575. So that's the important mark out there. 19,550, 19,600, that's a bit of a resistance zone. On the downside, though, the highest open interest on the put side is at around the 19,400 put. So 19,350 becomes extremely crucial. On the Nifty Bank, resistance is at around that 44,250. And I'll explain why. 44,000 call has the highest open interest. The premium of there is roughly around 100 rupees. Besides that, if you look at the 50 as well as the 100 DMA, it's in that vicinity of around 44,230 to around 44,500. So that's the reason why I'm saying this 44,250 is an extremely crucial zone. On the downside, you're looking at the 20 DMA. And once, till we're holding above the 2,200 DMA, you're feeling pretty good. So the Gift Nifty suggests a gap up. The Nifty IT index is likely to do well. The Nasdaq as well did well overnight. Cooling yields, good for them. And the other factor we're looking at is the Nifty Bank. Can it build on to this gap up? Very, very crucial.
Okay, so in all probability, off to a superb start, and then we'll see what happens from there. Let's get you the calls for the morning then on equities. Chetan Seth of Nomura says overnight, the widely watched US inflation numbers for October came in softer than expected across the board. In particular, he says US core CPI came in at 0.2% increase month on month, while the Fed's closely tracked super core CPI came in at an increase of 0.22% month on month. He thinks this report will be welcomed by the Fed and markets. He adds overnight US stock futures rallied. Bond yields declined and the dollar index was softer by 1.3%. He expects the recent relief rally in Asian stocks to extend further and says a breakout rally in stocks is now not a foregone conclusion as a soft landing narrative takes shape into Q1 of 2024.
Okay, well, let's get you some money market views as well. Kunal Sadani of Shinhan Bank says US inflation slowed more than anticipated, resulting in a sharp decline in dollar index, reaching the 104 levels, along with yields cooling off sharply. He says investors are expecting rate cuts sooner and betting on no more hikes by the Fed in 2023. He adds all eyes now on US producer price index and retail sales data for the USD INR. He says 82.85 to the dollar remains a strong support, while 82.2 to the dollar is a resistance.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But we run you through the licks first up. We're looking at Narayana Health, Manappuram Finance, Natco Pharma, Wockhardt, Biocon Biologics, and Kalyan Jewellers. They are stocks on the back of positive news flow. While on the flip side, you have Grasim, Aster DM, NMDC, and Yatra Online could be reacting to negative news flow.